We've been teaming up for a while now, catching some killer trades, and we just keep going. Um, and then get a little monkey wrench yesterday. That whole DeepSeek thing, man, it was quite the riot all of a sudden. But was it in the chart ahead of time? I've been kind of picking at this QQQ level where we had this descending channel. It's like, man, I don't know. These are pretty ominous about a sudden bearishness, and typically they'll come back up, hit a previous high or some fib of a previous high, and then sell off real quick. Well, we certainly opened up that enchilada yesterday, right off the liquidity zone from the previous recent high here on a 2-hour chart and 4-hour chart. And rejection was just clean. And then yesterday we just had an absolute gap down right into where we started closing bars in the angular support, which was previously angular resistance on the channel here, found an LZ in this area, and then we even in the pre-market wicked all the way down to where we could almost touch that 500 level again, which is pretty nutty, but a little bit of an overshoot of where I had in mind. But then we picked up off that liquidity zone pretty nice yesterday. We're still kind of warming our way back up to what I call the halfback setup, where about 521.40 is about the mean between the high and the low liquidity zone here. But I think we're probably going to chop around in this range for a little while before we figure it out. The market's kind of going to sort this and absorb this a little bit before we see what the next move is. But I mean, that DeepSeek thing, man, that was a left field move, but the chart was kind of ahead of it. What are your thoughts on that?
So a lot of things. Yeah. I mean, somebody always knows, kicking myself for not kind of seeing this ahead of time. Um, Too early to tell what this is going to be all about. AI is still the future. The question becomes, is it the same future we thought it was last week? Or is it a less US centric, less resource intensive future? So I think you still want to have exposure to the semis. You still want to have exposure to infrastructure, all the stocks we've been talking about, but you also want to make sure you've got all the aspects. So, you want the AI agents, you want the AI healthcare, the software, the hardware, the robotics, companies that are integrating AI. So, none of these companies are impacted. DeepSeek could be the best thing since sliced bread. None of these companies are going to be impacted. I've
Right.
been testing it out. Interesting. ChatGPT on more advanced stuff is going to give you a better answer. But this could be just like search engines back, before you were born. We had like 10 search engines, and you use whatever you use, and then eventually one of them, Google, becomes dominant, and the others go by the wayside. Um, so I'm going to use it. I'm going to use it kind of in parallel. There was an option strategy that I've been trying to get ChatGPT to opine on, and it's been wrong. And I haven't easily been able to make it see why it's wrong. DeepSeek got it right away. So, that was interesting. So, two is better than one.
Of course. And we touched a bit on this last week. I'm getting up there in years myself, but I was born towards the end of Generation X, so we some call us Xennials or whatever the hell. I don't take labels, but the point is that we were right in the sweet spot. We learned all the analog stuff before the internet, and we were like in just the right age group to start really picking up on computer sciences and information technology, and at the perfect age to do it, right in the high school level, like when Google was first, conceived, let alone out in the market. And it's funny because I found it really easy to teach myself how to prompt Google to get better information back from it. So it was learning how to use Google was kind of a wall for a lot of people, both younger and older than in our generation. But we naturally fell into it. We were able to just absolutely query exactly what we needed from it with a lot more ease than most people. So back in that day, I found a side hustle where I was literally tutoring people on how to use their computers, and the majority of that time was spent teaching them how to use Google. So now we've got AI in the mix, and it's kind of a similar situation. I think all the high school kids now are going to intuitively be able to query AI with more efficiency than we could dream of. So I mean, that's kind of what I can see in the pipe. And then now we've all got to figure out how to prompt it correctly to get the best stuff out of it. And that's going to make for some interesting things in the trading space too, because now we've got a little more leverage we can use for putting our focus in the right place. All we got to do is learn how to prompt it. So definitely some fun stuff. We did touch a lot on that last week, but I think
Yeah.
I can echo that over and over again, and eventually it'll sink into somebody. It's a point where you've got to understand that this is going to be a transitional time in human history, being able to interact with this stuff. That is the focus for most of it, and compound that with what companies are going to benefit from this the best, and that's answers you can get from AI. Is you can literally ask it, what are the best beneficiaries in this scenario? And that takes us to Google, which is probably one of the best things on our list that we're looking at. And also, I used Google as a bit of a advanced charting example. If you guys caught my advanced charting techniques video series, I released 3 videos on that so far. Got more coming, so stay tuned to that. I've got some interesting stuff to talk about. But let's go into Google. This was the example of what I like to call the trap detector, and it was just methodical at finding both the point where you'd expect a liquidity trap. It also gives you targets, and it also gives you rebound targets. So it gives you just a plethora of really smooth trade setups all in one box. And it's really just as simple as finding a descending wedge. In this case, it was just a giant bull flag, and all you do is grab that second impulse and put it on top of the angular, and here we go. There's your liquidity trap. It sold off, and with our burrito being open with DeepSeek yesterday, it hit right on angular support and closed bars there and started giving us swing trade setups for reversions. First was a reversion to the regression line, which it hit yesterday and today, and now we blasted through to the angular resistance with a nice clean wick here. It's also hitting moving averages pretty cleanly, but if you draw the pattern and you draw the trap detector box, you also get the extension targets. So if we can break angular here, our target's probably about 198. And if we get into this as if it were a measured move, you can kind of plot. Well, there's a primary, secondary's down here. So the halfback would be, let's go up to 201, and the extension would be 204 for resistance. And it's a pretty neat little trick, but it also gives you some really good short-term swing targets that you can trade while the market's waiting for all this absorption to figure out what the hell to do with this event. So now we can go and look at the long-term outlay, and we can see, well, the primary measured move is still intact. The secondary measured move gives us extension targets for half a move at 210, a whole move at 225, and Google is just picking up lots and lots of investors and buyers as we speak. So it's all going right. Um, as far as Google's own AI stuff is going, it's actually slowly working out. And then I don't know, Microsoft has the Copilot thing going for it pretty well too on Microsoft Edge. Can we see some?
Everyone's got their own thing. I mean, at the end of the day, though, that's not the end game.
No.
You know, me posting my themes into ChatGPT and getting stocks and paying $200 a month. If that's the end game,
Right.
they got a problem.
For sure. Because I mean, not everybody's going to be able to pay $200 a month to utilize that. And I'm not talking just traders, but I'm talking in general. I mean, are you going to see this as another service in your home, like cable TV was, and like streaming services are now? Yeah, it can kind of play a role like that in some aspects. But how far does it go? It's not an end game. It's just part of the I guess you can call it the onion effect. It's just a layer that we're at right now. and
Right. We're at the beginning.
it goes to a very very dense core, I could say.
And and again, like the internet bubble, which a lot of people may not have been around for, people miscategorize that. And they're like, oh, the internet bubble and it burst and people lost so much money. Well, no, there were massive winners, and then there were companies that went to zero. You couldn't just buy all of them.
Right.
But if you were in, the Amazons and stuff like that, you had no real internet bubble. I mean, you did very, very well. And they're going to be winners here. And I think, from my perspective, longer term, it's trying to figure out what those are likely to be, but then playing them in a way with measured risk. And from your perspective, it's trading.
And it's funny you should mention the tech bubble. I mean, a lot of the stuff that had no real weight in a sustained value was like information systems, sciences. A lot of that stuff was just, eh, I mean, you built a dot com on hype, and some of those were just empty smoke barrels. I mean, there's nothing in them. But then you get companies like Amazon, and you get companies that actually had goods to sell and a service to provide, and an adaptive base that can grow with the times as well as with the market. Those were the ones that made sense. So being able to pick themes out of a bunch of smoke is going to be clutch in this environment. And you and I have become pretty good at it, I guess we could say. I'm not going
Yeah.
to break my elbow, pat myself on the back, but almost. So, as like looking at the comparative shift between Google and Microsoft here, and you kind of got, yeah, there's some direct competition there, and all we really need to know is where's the price targets? Can we scalp some? And we got a beautiful primary example on Microsoft. We had a pretty much no-brainer measured move play set up right in yesterday's price action. Base came through an angular support. If you look back, this was that previous wedge. I always extend these lines, and then I build a regression here. And essentially, we have a set of fan lines out for targets in the future for just trend line falls, really. But we've got a pretty good shot at hitting a fib level of the previous high here, which is about a half MM up. So like a 448 target is pretty reasonable in this move, even though we've gone quite a bit far into the bull side this morning already. And we're hitting some liquidity where we got about the center of this consolidation here too. So about 443, 444 is kind of the limit range for the primary move. And then secondary follow through would be up to the 448 up into that fib level. So, Microsoft is set up pretty good. That would have been a killer dip buy yesterday. The BTFD crowd was certainly present in that 410 area. They smoked it right on back up. And now we're kind of right at a level where we can agree on some consolidation, maybe some extension moves. So Microsoft doing pretty good with this whole thing, and then its own version of AI, as I was saying, with Copilot there. I like Copilot. It's free to use for the most part. You can talk to it in voice, and you can ask it questions and get all the answers and stuff you want. Um, and even if you take the paid version of it, it's a lot better with the paid version, obviously. But you can get something from it, and all you got to do is know how to prompt it. So it's how you value that time that you spend querying the AI for various pieces of information. It's going to give you a little bit more of an edge into your long-term stuff, more than anything. You got a lot of fundamental analysis is possible with AI, but I got to wonder how long until it gets good at technical analysis. That's what I want to know. Is it going to replace what I do? Well, we have to find some sort of alpha there, I'm sure, eventually. But for now, we'll just trade the short term until things work out and start to trend. So yeah, Microsoft, I've got kind of a pretty easy target on that. But there were a few
Just
others.
one thing I'd add, just be careful as we're going into earnings season.
Yeah.
And what we're going to want to focus on is, now with this DeepSeek news out, and I mean, it's not going to affect past earnings,
No.
but what are people going to talk about as far as capital spending? Where, the Microsofts of the world were like, hey, we're going to be spending a fortune. Are they still going to be doing that? And, that's going to be real interesting. I'd be careful chasing some of the software stuff.
Oh, agreed.
But, you certainly want to be allocated across all the different kind of, industries in this theme.
And then with Microsoft, I mean, their earnings is out tomorrow. So, I mean, this is going to be, a pretty quick banger as far as short-term price targets. But we got the range, and we can take advantage of that during an earnings call. If things get ripped down again, if they have some sort of quick news, knowing where these targets are, you can be a part of that BTFD crew, but you can be ahead of them, just depending. And it's got all kinds of range. We got way up to 460 for the upside, 410 on the downside. That's a $50 range on this thing. And it can do any of that during an earnings call. I've seen many times back in the day when I was just, able to day trade on my lunch break when I lived in Montana. Sometimes I would wait and take my break later on Amazon earnings days because I could make like $500 in a few minutes per share on the earnings call and just scalp the earnings call. All I had to do was figure out where the ranges were, plot targets, where I'd expect a reversal and a bounce, and then scalp it, and then go right back to work. That's what really helped me build the capital that I have today to be able to, trade for a living. So days like that became clutch. Yeah, so definitely be nimble with Microsoft and pay attention in the earnings call. But we've got the range established, and we just need to kind of feel it out from here. And I don't know how Microsoft is going to, react more to this DeepSeek thing or not. It may just be flat. We'll have to wait and see. But earnings tomorrow, we'll find out soon enough. This is the FA part of the series. Tomorrow is the
Yep.
FO. Moving on, NVIDIA gave us an incredible dip, and we found that 117 pivot months ago. We were talking about this way back. We were still slapping Kramer around when we were talking about that limit. And that's been like a magnet for a mean price range, or I don't call it fair value, but it's close enough with NVIDIA anyway. So I went and sold a pile of puts on NVDX yesterday, and I got a really nice premium for them. I could take a 50% profit right now if I wanted to close them, but I'm going to leave them for a while. I want some of that personally. And then looking into NVIDIA, its earnings will be dragged out to the 26th. Will it move symbiotic to Microsoft? Probably a bit. Will it move symbiotic to some of the other earnings coming out? Probably. These guys are out a little bit longer. So one of the things I caught yesterday that was just a rumor, and the old adage of buy the rumor, sell the news, it gave me a pretty good notion to take advantage of that 117 pivot for now, short term. Half back, we could see about a 130 move, just kind of eyeballing the high low here. But we got some liquidity to work out first, and we need to see this double bottom, kind of follow through with its textbook maneuvers and melt this zone, get above this high, and then shoot for that half back. Probably short term, more like 132. As far as earnings go for that, the rumor is that, and this is kind of a silly one, but I didn't do any real digging into this. I didn't even ask AI about it, but the rumor was that DeepSeek got a whole bunch of NVIDIA chips through some backdoor deals through Singapore. Maybe. I mean, that's just a bunch of fluff, but what goes around,
Yep.
Could that be true? It may be true, but if it is, you got to wonder what Q4 earnings are going to look like for NVIDIA. I mean, if it moves a lot of chips and a whole bunch of server farms were built, well, they need hardware. Kind of a no-brainer. This is reminiscent of that time where there was a bit of a fake going on with Tesla back in the day when I made a killer move on a Q4 earnings call. It was, I saw all the inventory sitting in airport parking lots, but then we saw it all dissipate towards the end of Q4. There were a bunch of Teslas sold at that time, and price was just getting beat down. Everybody was downgrading it. It was just an absolute, for lack of a better way to say it, a shit show. And I picked that sucker up off the bottom and made a mint coming back to the high. And it was just easy. All you had to do was look at the writing on the wall. And there was another YouTuber that has this channel called Connecting the Dots that I kind of paid attention to. I'm like, yeah, that lines up with what I'm thinking. And I started looking into it. I did fundamental analysis and it made sense. That's rare for me.
Nice.
Going through the other stuff on the heat list here, or the heat strategy mailer, and I just kind of picked them all off and transferred them right into our watch list today because that's all the stuff that made sense to me today. Should I start with AMD?
Sure.
So with AMD, we're still following through our bearish measured move. Only I want to take a notice that we did break the half. We did break the liquidity zone. We're still pretty bearish in this thing. And I still have a target down here around 104, 105 for that follow through and that whole move. But earnings
The
is coming up.
interesting thing about AMD is a lot of people are coming out and saying that they ought to be a winner from this.
Yeah.
And if you look at that chart, it doesn't look like a winner.
No.
So,
No.
I'll take the chart over, analysts. I think even, ChatGPT told me AMD ought to be a winner,
Right.
but I'll take the chart over any of that any day.
The chart tells me there may be opportunity to go long at 104, but until then, I'm still in a bear mode. And
Yeah.
I also say, anytime you hear any analyst, excluding us because we aren't paid by anybody to do this, we do this on our own time. And I'm grateful that Matthew takes the time out of his busy day to do this with me. But let me explain. No one's paying us to do this. We're just doing it. So the idea is you hear an analyst, they all got paid by somebody. And I don't want to, cause any waves, but typically when they say upgrade, I say exit liquidity because
Yeah.
almost 90% of the time that's what it is. And we used to say, especially when Kramer mentions it. But I can't throw that kind of shade on the whole concept of analyst out there. But every time I hear an analyst produce a target, an upgrade, a downgrade, I look at the chart. The chart never lies. The chart always tells me what to expect. And data on previous encounters seems to really stick out and tell me the business, so to speak. So every time I hear an analyst talking about it, what I do realize is that brings more attention to that equity. And then I start digging into the chart and I look for opportunities. Well, guess what? Now you've got volatility and volume involved, and you have liquidity to make some pretty killer plays. That's the idea. So don't discredit everything an analyst says, but pay attention to what they're saying things about, and then dig through the charts. The charts will tell you the truth and oftentimes tell you the targets. And in this case, AMD is still following through. We've been bearish on this for a while now. Eventually, we may change our tune. Until then, we're still riding that trend, baby. Going into the next one, Amazon. And holy smokes, man. This is one of the beneficiaries that kind of stood out to me the most in that session where you were saying you were talking to AI about it. 3-for-1 measured moves are pretty damn rare, but here we are. In retrospect, this entire trend could be called the primary move. This consolidation was very obvious. It even gave half backs and stuff. The follow through for a half measured move up is 252, and then a peak target 275-ish, 276-ish. Pretty damn extended, right? Can we say that this is going to be just stick with the bull trend until it runs out of gas and then catch the dip and buy it again? That's a tough call, but I mean, like I said, 3-for-1s are very stupid rare. But taking the concept, it's still just part of a much longer term 1-for-1 measured move. So I'm gonna go and make a video about how to build these later on too. That's gonna be part of that series. So coming out with that. But yeah, what's your thoughts on Amazon in general for benefiting from the AI space here?
So again, we don't know what the impact of DeepSeek is going to be. We do know that it's unlikely to affect Amazon. Um, I think it's a must own, and I own it. Would I buy it right at the moment ahead of FOMC tomorrow? Tech earnings coming out. I don't know when Amazon's reporting, but I would assume sometime soon. No, I wouldn't.
Yeah, I won't be messing with it either. But it's got potential for the outside of it once we get through that to give us some pretty killer moves. And
Yeah.
you could see the BTFD crowd was definitely interested in it down here. So I'm going to leave this on the mark here just to kind of keep reference to it on the daily chart and realize that that could be the base step. So if we go 1-for-1 here, that's the mean to return to. So if things get tipped over real quick, you'll get another BTFD moment as far as that goes. So yeah, FOMC is going to have a huge effect on the market, and compound that with this range that we're building with this DeepSeek thing, and I think we're just in big range market. And then couple that with when's the next Trump tweet coming out?
Never know.
I've been kicking around the idea, and if someone wants to take this up and go market it, cool. Red hats that say MVGA would be kind of funny. Make volatility great again.
Yeah.
That's the kind of market we're going into, guys. I would sport that if someone were to produce it. So if you need an idea for marketing something and you got a t-shirt business or a hat business, you're welcome. Going into a couple others here, and this one kind of struck me as odd as ASML and why it would be in play here. It did have a nice dip to liquidity, and yeah, we hit exactly the point of liquidity on this thing. Can we
So
get a meme version?
here's why AMSL, ASML, I always get it wrong, is in play here. So they make, and I'm not going to bother to say what it is because I mean I don't understand the tech, but they make something that in the traditional AI model you could not make AI work without. So if DeepSeek, everything they're saying they've done is accurate, theoretically these guys could be one of the big losers here, which is why you saw the stock go down 60 points or whatever it was yesterday, and it's down again today.
As a hellacious move.
Yeah.
And in the long term, I'm looking at the weekly chart. I'm like, this is kind of still on the high side of where you'd expect market structure to be after something like this. So I mean, it could be seeing market structure eventually, and it's got a ton of downside risk. So this might be an epic short for some people. That's a good point.
Yeah.
Can we see that thing down to 70 again? That'd be psycho, but anything's possible in this market, as we've seen. For now, we got some liquidity zones, and I think I'm going to aim to make that one red now that I think about it. Gives me the danger zone, so to speak. But this whole primary behind this thing could send this sucker reeling down to 330 pretty quick, just kind of eyeballing the measured move size here. Yikes. Yeah, I would definitely be ready to be spry on this one, and it's setting up where it could be a decent short. Agreed. So yeah, that could be a good baby. Keep an eye on that one. I'm gonna keep that as a earmarked as a favorite in the watch list here. All right. Moving on, we've got another one that's really a immediate benefit of this, and this is where a lot of hype follows through. This is where a lot of the retail traders are focused in this one, CrowdStrike, and boy, did it get after it. The BTFD crowd smoked this thing right back to a mean, and then opened up at the mean today, smacked a 1-for-1 and damn near a 2-for-1, or more than a 2-for-1 out of this. Just marking the short-term measured moves here. What's your take on this guy?
So I think this is one of the areas you want to be in. Agentic AI. We're going to be filing for an ETF on agentic AI. This is an area that if DeepSeek, again, if all the claims are real, then CRM is probably a beneficiary because they can access AI cheaper.
Right.
Again, do I want to chase? No. I mean, understand kind of what you're seeing, where you had a bunch of hedge funds, a bunch of money managers way off sides. And, unlike us, where, we could, again, assuming our emotions don't mess us up, we can go in and realize, all right, you know what? Yeah, I was off sides. Let's, carefully kind of, get rid of some of the infrastructure, get into some of the software, or we could just, blow everything out and do everything at 931. These guys were all forced to flip their book. So, do I want to chase it after it's gone up 10% over the past couple of days? No. Is this a name that you should own? Yes.
I can agree with owning this name eventually. And yeah, I agree also that I wouldn't chase it here, but that's a big ass wedge. And I just went and kind of built the trap detector on that one. And liquidity would be hilarious to ignore that 442 level with a massive wick from here. So if it does get chased, you'll probably see a pretty nice high wave and maybe even a giant doji like this out of the whole thing for the weekly chart. That'd be cool. That'd make my day. So yeah, definitely be spry if you're going to be messing with this thing. You gotta have some very quick agility there, some Jedi reflexes, if you will. Oh yeah, I'm wearing that shirt. So, um, kind of, can we get the extension off this thing? Yeah, it's ballistic at this point. Would I chase it here for a swing trade? No. Even if I had enough size to make a difference in the damn thing, I wouldn't mess with it. But here we can see a doji party on the 15-minute chart, right at the level where I would have taken a good day trade exit on this thing. The 2-for-1 was just brilliant on this. Can it go higher? Sure. Watch this level for today. Maybe you get a decent day trade out of this and block it up another 10%. Okay, that's possible. This thing can sure move, and it does have a lot of retail focus. But day traders, be aware. When you start hitting those levels where you get to that midline on that trap detector, things get interesting. So that's why I always use it. And that thing has been pretty methodical at finding these liquidity targets or liquidity trap targets for me on any scale, as I just demonstrated with Google as well. Same kind of scenario, just a much longer time frame for the compression on the flag play. But yeah, this stuff gets pretty fun with technicals, and that's just another reason to start paying attention to some advanced charting techniques, because I really think a lot of that is going to be more popular out of this overall, especially in a volatile market. So you're going to want to learn some charting skills in this for sure. Whether you're a fundamental analyst or not, doesn't matter. Be a trader, learn price action first, take advantage of that. Then you can be an investor. That's my take. Um, as for a couple others to mention here, Pan West was another psychotic retail chase.
Wait, what it was?
Pan West, PNW.
Oh no, that's not Pan West. Palo Alto.
Oh, Palo Alto, yeah. Sorry. Pan West. I'm thinking
Wait,
bank.
wait, what's that?
Jeez.
Yeah,
Brain
because
fart.
cybersecurity is another area. If they can integrate AI in for cheaper, boom, there you go. Helps them too.
Yes, sir. Let me reset my chart here. It's going on wonky on me. There we go. So I mapped out a liquidity zone, and I don't know why I have this big giant red square up here. Those are somehow my drawings got skewed all over the damn place. Sorry about that. I'll just delete all this. What this was meant to do was to mark out this previous wedge here. So we had an angular come through here. You can see the wedge here. And this move here is off of angular support. This was a previous, and again with the trap detector thing, if you see the wedge here, you'll see that this was about where that liquidity trap was. Same scenario, melted down. In this case, it found support on angular and bounced, and now we're back to just above the mid-level of what that trap detector would be. So I marked it with a liquidity zone, and that at least stuck. And you can see that from high to low, it's about where the half back would be. So this is extended here. And I think that retail's probably going to get a quick reality check for liquidity right where it's at right here at about 198. And 200 being a round number, that can be a focus and a target and sort of, I like to call it the carrot on a stick as far as you get institutional money out there, and that's exactly what it looks like. You'll see a whole bunch of limit orders kind of piled up right there as if it's some kind of wall. And you can see the wick was just under that. And now if you look at the 15-minute chart, we're wedging out again. So apply that little trap detector advanced charting method to what you see out of this little wedge here. And you'll either get a really quick scalp up to 200 or just under it and rejection back down to this liquidity zone. I could be wrong. It could just melt right through that. Anything goes in this market. So for now, pay attention to the fundamental price action. You got a primary liquidity zone, a secondary. We've met that target. That's where this stopped. Can it go higher? Yes, it can. But just be nimble if you're going to scalp this thing. It's a little bit late to go chasing it here. And this is primarily made of hopium and dreamium from retail if you look at this the way we do. It really is.
Yep.
So be nimble if you're going to be chasing that one. And then one other one that gets a lot of retail attention that's on the list as well. Well, two more. First, we'll start with snow. This thing, I could almost call this a widowmaker from the past because you've seen these drops. I mean, they're just gap hungry. But this is also about basic market structure too. Let me look at this in a longer term here.
And again, I think this is another must own. Would I,
Right.
if I don't already own it, would I buy it today? I would not.
No, same for me. And we're right in the liquidity zone where we would expect market structure to either build a base or reject and come back to the mean. So it's like right in that level where it could go either way. If it does melt this zone with some good force, sure, we can shoot for that fib target up here at about 225. That's pretty reasonable. If I were to build the blocks here, it would be like the secondary target anyway. And I always split that, so let's go here. Take it a little shorter, and it comes right to that 86.6 fib roughly, just eyeballing about 228. So if you're gonna see some quick explosive moves on this thing, that's about where the limits would be. And then there's one here at 198 as well for half a measured move. Just look at the previous one, pretty obvious. Pay attention to this liquidity zone if you're gonna mess with this thing. And like Matt said, don't chase this thing if you're long term, if you can't get the hell out of the way fast enough. Be patient, let this thing give you a sign on whether or not you're gonna take advantage of a bigger move or not. But in the short term, be nimble. This thing's going to be vicious, and volatility can really, really mess with newer traders and just suck the heart out of long-term guys and swing traders alike. So be cautious on this guy. Again, I would love to have sold some puts on this thing on the low, and I just didn't get into it enough. And yeah, I'm not holding the bag, but I would have been holding the other side of the bag, I guess the lift from everybody else lifting my bags from that point. And then that's why I sold some puts yesterday on NVDX. I sold the $10 strike, February 7th expiration, and they are glorious now. Same scenario, different thing. Retail chases and those who think like a market maker take advantage. That's just how the market works, guys. Last but not least, TSM. Damn, son. What do we want to do with this one? Well, it hit our previous target here, that 210.80. That was based on a long-term measured move. I deleted the drawing for some damn reason, but that was just a massive extension from a long time ago. Blew that away, but now we're looking for some volatility. So is it going to be a decent short for a mean reversion, or is it going to get up and boogie here? That's a tough call. When's the earnings?
So here, I have personally avoided TSM because of the China invasion risk.
Yeah.
I can't get AI to tell me not to buy it. Every query I run for almost anything, and I just ran a query just now on some emerging market stuff. And and I asked, give me some other Chinese companies. If you find any, it said, well, this one's not Chinese, but I'd buy it. It's like, stop telling me to buy TSM. So, I may just need to bite the bullet and buy it. I mean, especially if it breaks back above the 50-day, then you have a nice undercut and rally.
Right. And that sell-off was pretty stout, but it wasn't like, all the way down to the 200. So it's got some
Right.
roots here. And undercut and rally is a damn good plan. Um, in the short term, I'd say like a reversion target at 210.80 is pretty reasonable. But what do we do with it when it gets there? That's the question for me. Is this one you really want to own, or is this one you want to trade? I'll have to look at the premium on this thing and see if it's worth wheeling, but I think it would have been better back here
I
at the
think
80s level.
without the China risk, it's a name you really want to own. With the
Sure.
China risk, you just got to make a decision.
That or trade the chart. I mean,
Yeah.
the saber rattling's always going to be, the Taiwan invasion's always going to be like in the ether, so to speak. But in the meantime, we've got reversion targets and lots of price action and pretty good range. So just scalp it. Scalp it till it becomes something that's actually worth owning. And yeah, these targets are easy to find. And the chart wasn't all that interesting in the recent past other than just some basic measured move stuff. But now it's starting to get some broad range and some volatility. Um, just in my style of looking at stuff, if you look back enough, you'll see that this broadening pattern started getting wider and wider. And yesterday certainly snapped it to the limits on both sides. I could presume that the reversion target would be about where we'd see a regression line if this were to compress into a giant flag here, and this whole thing would make up a diamond. Typically, those precede great volatility. And if the prodigal son returning to the White House kind of gives us the notion of he might have some sort of strategy to prevent or at least prolong the advent of the China invasion or something to that effect, a diamond pattern would make sense. So we'll have to wait and see what happens probably towards the end of the first quarter before we really see things. Because just looking at the chart, it's about the time space I would see that the compression would take. So maybe we might have something to kind of focus on later on with this. So I'm going to keep it in the watch list, but it's like I'm not going to really do much with it other than scalping until then, personally. So yeah, it's definitely one of those what if, and if things go well and the China invasion gets completely blocked, this thing could be a beast, an insane beast. But look at how parabolic this has been. So always have that on the ether side.
I have a feeling that if China was going to invade Taiwan, they would have done it under Biden.
Yeah, for sure.
I don't know that you mess with Trump.
No, I mean we just saw that in recent. Not to get political here, was it what country was that? Colombia refusing to take their plane loads of illegal immigrants back.
I mean, Colombia is a little different than China, but still,
True.
I think what is it? FAFO.
Yeah, pretty much.
Yeah.
And like within minutes of Trump saying I'm going to destroy your economy unless you take these guys back, yeah, he buckled. Quite simply, FA'd and FO'd. So
Yep.
we're gonna see some more of that maybe. And I wonder if in the grand scheme of things, there's a chance in hell that the China invasion could be thwarted once and for all. Sure, but in the meantime, market structure says this is possibly not the outcome. I think maybe they wait 4 more years. Who knows? We'll have to see who the next guy in office is to really, really understand that one. But TSM for the meantime, yeah, it's just a scalp maneuver for me. It's a vehicle of making short-term income. Um, one other thing that was kind of I guess you could say, honorable mention in this whole scheme of things was Apple. And Apple, I had that previous measured move on. It, more or less broke out of the half measured move and hit some liquidity and came back down to support. It gave all that back. We're in the halfback lower edge liquidity zone now, and we can see the BTFD crowd was in force on this one, right off of that 220 target, and now we're bullish again. Can we see Apple melting through this a little higher and coming up into full reversion about 242? Yeah, I can see that happening, possibly even today. From there, pay attention to that earnings calendar, guys. The 30th is coming soon. I'd love to see it spot this entire range during your earnings call and take advantage of a nice, big dip buy maybe, but I don't know. Apple could also just blow us away and shoot for that 282 on earnings. It's going to be anybody's guess on this one, but the other thing that's kind of ominous to me is like we can see broadening and we can see conceptually tightening here. So it may just drag this on out and walk along that range around that mean 242 target. So I think that's more likely the scenario through at least Q4 earnings. And then possibly when we get towards Q1, that'll wrap up very similar to the TSM thing and maybe give us some insight as to long-term swings on it. So be nimble with Apple in the short terms. This earnings coming out, and a whole bunch of big companies are coming out with all their Q4 earnings very soon. We're going to see some great volatility and great opportunities, but swing traders are going to have to be a little bit more nimble than they're used to being in this market until that's all done with. And then Q1, I think we're going to have some killer long-term setups going into that. So get through the volatility first. We're going to see some better moves for swing traders later. Meantime, it's a good day to be a day trader.
Yep.
Should we touch on Bitcoin a bit? I think we got time.
Sure.
Oh yeah, we got almost 15 minutes, man. That's an eternity to us traders. Well, us day traders. I always type that in so slow. So been playing with Bitcoin for a while, and we're right at the regression line of this channel. That was, the wedge output. I like to draw fan lines. I'm kind of seeing another diamond take shape too. And I gotta wonder when this thing snaps, is it going to give us the rest of this bull move to 117? It's possible. We do have some liquidity up here at about the 108 to 110 peak here that was previous. Yeah. Would I get long here? I'd wait till it breaks regression and maybe shoot for a 1-for-1 up to this liquidity zone. But short term, I don't see a whole lot of things going on until we get all the other. There's like a whole herd of elephants and gorillas in the room with this one. So everybody's talking about that it can hit 200 by the end of the year type of thing, and a lot of that hype played into this previous volatility. But is 100,000 maybe the new support level that was our previous resistance target? Yeah, I think so. I think it's well established right in that range. What do we get in the mean?
And again, I'd say that we've got a crypto president who has his own coin.
Right.
His wife has his own coin. We have a crypto czar. We have a crypto SEC. I think we're in the golden age of crypto. I'm not exactly sure what that means, but I think when you see a sell-off in crypto that has nothing to do with crypto, I buy it.
Damn straight. And that's where we're looking. So back to regression, and worst case scenario, we test this, half back to 100K, and then see some buyers come in and crack this back on. In fact, there's 2-hour liquidity right there as I'm looking at it. Ping, right in that range. So keep eyes on this thing. If we get down to like 101 or 100,000, there's going to be some buyers if this rejects the regression line. If not, if it melts through the regression line, next liquidity zone's up here around 106.5, 106.7. So definitely some great day and swing trades to be had on Bitcoin and everything related to it in the short term. But in the long term, yeah, you definitely want to start looking at owning this long term. Around that $100,000 core per coin is about where I think we're going to swing for a while. And then if worst case scenario, I mean, you could see broadening and contracting. If that takes precedence, again, wait till the end of Q1 for things to kind of come to a point, and we may get a great opportunity to see a huge breakout move, finish this measured move target that we have up here. Very possible. Or if 100 doesn't hold and this diamond breaks to the south side, the halfback's all the way back down here at like 78. So that's in play too. Be nimble if you're going to scalp this thing in the short term, and in the long term, there's going to be some opportunities. We can see that already. And either A, it's going to give half back and bounce, or B, it's going to hold this level and resume the measured move. So I think by the end of Q1, we're going to know a lot of stuff. So let's see what happens. All right, anything else to get into? We still have like 9 minutes, man. Where do we come up with all this time?
I don't know. No, I mean, again, FOMC tomorrow, earnings. Be careful.
Yeah, definitely be on top of your game for day traders. And I can't say it enough. If you're a long-term investor or long-term options income investor or any of that, start taking some time to really learn price action and an emphasis on learning some day trading tactics, because they're going to help you. As we've been saying, much of the alpha in the market in general is gone. It's all gone to, well, us traders. That's where it's gone. So if you learn that price action, it will really benefit you to make some really solid decisions when it comes to technical analysis as well as fundamental analysis. You can combine the two and really have an edge, and that's where you want to be, is being able to take advantage of maximizing what you get out of the market, whether you're in it for a minute or a lifetime. It's the same. Learn that price action. I guess we can wrap with that, man. I don't have any comments or
Right.
anything. Goodness, y'all been
Beautiful.
quiet out there. Well, if you do have any tickers you'd like me to look into, feel free, shoot us a comment in the community and or on the YouTube channel. And even on Thursdays, we do it in a webinar format where Matthew has a emailer that you can sign up for to get on that webinar, so you can be even more directly involved with us than you can on YouTube. So if you have any questions, any tickers you want us to look at, any sectors you want us to look at, our eyes are open and we love doing this. So, give us something to do. Throw us a ticker. Thanks again, guys. We'll see you on Thursday.
trades and then give back the entire move. Seller at 40 right now on RNAS as it comes right back into my entry. I'm long 08. We're going to risk 8 pennies. So anything below